Good morning, everyone, and welcome to the Quantum Leap Morning Market Analysis and Trade Plan Setup for Thursday, April the 24th, 2014. For those that are visiting from Twitter, my name is Doug McKay. I am the head moderator and founder of Quantum Leap. We are a self-organized learning environment that's been around for over 4 years. We have a private Skype room. If you're interested in finding out more information, you can send me an email at d.mckay@stealthtrader.com right there on the screen, or send me a Skype request at Doug_McKay. I'll be the ones from Windsor, Ontario, Canada. Each morning we come together and come into this live go-to, and I go through my market analysis and start setting up my trade levels and my targets and my main and secondary hypothesis for the day. If you are watching this on YouTube after the fact, we start with the macro to the micro and look at the key numbers and the trend in the different time frames, and then we get into some more in-depth chart analysis. So you might want to skip ahead just slightly. We can't do that because we're preparing for our trade day. Before I do anything, I've got to get the legals out of the way, so let me do that. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions made. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within the self-organized learning environment. Past performance is not indicative of future results. And any trades that you see in Quantum Leap are for educational purposes only. Please trade your own plan, do your own due diligence. Okay, so let's get to the numbers right away. Obviously, we got a pop. We went up and hit that 81.50 level overnight, and now we've had a pop on the news at 82. So we're going to open outside of range and outside of value this morning, and we'll talk about what that could mean. So of course we're above the year open, so we have a bullish year back in play right now. We have our year high just above us, 10 points within 10-point handle, 1892.50. Our year low is nowhere in sight. Our month open is 1864.50. That would be a lower number that I'd be looking at today. And that's about everything in terms of the macro numbers, except you've got the prior all-time high and year high and last month's high at 1887.50. And that would be my immediate target above right now. In terms of yesterday, well, we had a very rare occasion. Only we're becoming we had a normal day just back on March the 27th, and we had another one yesterday. This is only a 3% occurrence, so it's a very low probability, but we're in this market that is, in a battle zone. You can see all the neutral days that we've had lately, and then we have a normal day. So that's indicative of the bears and the bulls fighting it out for dominance. Yesterday in the Globex opened at 73, had a high of 75.75 and a low of 70, with the RTH open inside of range and inside of value at 72.75. 3¼ point, opening swing. Again, we had a open inside of range. First clue of a rotational day. We had a opening swing that was greater than 2 points. We've had greater than 2 points pretty much every day in the last little while, and that's why we're getting these big rotations. The market on open orders have a disparity in what their perceived value is. Initial balance high 73.75, initial balance low 67.50, with a 6¼ point initial balance inside of a normal distribution between 6 and 9 points for initial balance. Again, another clue for a rotational day. We did have a little bit of a stall out. We were expecting that yesterday. We said that we were looking for a rotational day and that we'd likely get stuck in this range trading where we are, and we did have an inside day. There is a little bit of weakness, 71.75 as the 1230 number, 73.75 as the high, 67.50 as the low, 72¼ as the close, and then our DPOC was actually lower at 70. Of course, with the news that and overnight we popped up higher, and we're continuing. As I've been saying, when we came up and we accepted that microcomposite 6450, 6475, that was our clue that this move to the upside is not done. So I'm still anticipating to see new highs and probably a test into the 1900s before this is over. In terms of value, value was lower slightly at 72 on the high, 69.50, but not a big thing, and we did not break the IVs either side, so we did not have break. And the volume was, again, lighter than usual, just under 800,000 for the RTH and just under 1 million for the full session. So volume has been very light. Let's take a quick look at what's going on here so I can see where we are. Did we get a new high? 82.50. We didn't, so let's go put our numbers in for our ATR targets. Now this is likely to change before I'm even done homework to the top side, but we'll go ahead and put in the numbers now just to see, give us a gauge. I don't think it's going to change the range target to the upside, although you'll have to start looking at the RTH high and low for your RTH 20-day average true range. So right now the full session ATR target is up at 92 and the low ATR target is down at 62.75. Of course we had news, we had unemployment, we had core retail, and we had durable goods that caused this little spike in the market. And we don't have any other scheduled news until 9:30 Central, which is your natural gas storage. So let's go right away and look at the trends. I always like to see where we are in the macro and then drill down. Great slope and separation on the 9 EMA and the 20 SMA. Prices paralleling the 9 very nicely, and we're trading near the all-time high, so the month trend is very much intact. Same thing with the weekly. We did get the first close below the 20 SMA, going back all the way to the week of the August the 26th, and then we popped back up and closed above the 9 and the 20, and now we're getting slope and separation, and this is telling me that the trend is still intact, although we do have a possible head and shoulder pattern setting up. So if we stall out in around this area or just below 92 and come back down and break below what would be the neckline somewhere in around 1800, then we can look at what that measured move will look like. On the daily, you can see that we've got good slope and we've got good slope separation. Problem is we've got a bit of a technical gap going on right here on the daily. So we've got to expect a bit of a stall out and probably a retracement coming. Doesn't mean that's going to happen today, but we're pulling too far away from the 9 EMA right now. So the 9 EMA has to get closed out either through going sideways through time or coming down through price or a combination of both. Usually it's a bit of a combination of both, but this is pretty strong here. I would expect just a grind right now and a slow, let the 9 EMA come up and then catch us and then pop from off of the retest and the close of the tech gap. That's my my larger term analysis right now for the daily. On the geometric chart, well, we've broken out of the 2 downward sloping forks. I'm going to do some more analysis this weekend, but a test of the the center line of the upward sloping fork will take us up to 1899.80. So basically, 1900 test, which will likely happen because we've rejected the lower line of the longer term upward sloping fork, and usually when you come up, you're going to come up and test the center line again, and that's going to take us up into the 1900 and a test of that value. Let's just take a quick look at the intraday trend coming into the RTH. You can see that this 4-hour was tested yesterday during the RTH session, and then we closed back above We didn't actually close below it, so you can see that we've got slope and separation, and the trend is still very much intact going into the RTH session on the 4-hour. On the 30-minute, a little bit of a different story. You've got now you've got a possible flagpole measured move here. So let's take a quick look at that on the 30-minute, and I'll try to do this as quickly as possible. I like to take it from the apex of the flag, so I'm just going to take it to right about here, and that's going to give us a measured move up to 1886.90, which is right near that former all-time high. So just keep an eye on this. We've broken above the flag. The measurement of the flagpole to the apex. You can also do this another way too. A lot of people will take it from the breakout point, and that'll take us up to 1887, 1888, and then 1887.50 is the former all-time high. So just something to look at. And then let's just go to the 5-minute. 5-minute, you can see we had that pop on the news, created this technical gap right here, and then we came down. This is actually a nice gap close. This is actually a tech gap, Mr. Sneaky, but boy, they popped it even higher, and then now we've had the big sell-off and a move down to close the tech gap. So the trend is still intact, but it's trying to break through the 9, likely to come down here and test this 1880 area. Remember, 1881.50 is going to be balanced in this particular area and was our one of our main targets above yesterday. All right, so let's go and take a look at the composite and start looking at the structure. All right, so we had, I don't need this right here. No, not the profile. I'll worry about that later. So we came up and we found balance the last 2 days in around this 70, but the 81 was the area that we were watching above with the breakout of this this area around 64. Let me just bring this to the front. That 81.50 was the last area that they tried to hold value prior to making the new high at 1892.25. So the key here is if we hold value in this area and accept it, they're likely to take it up, try to break it out of value. The value area high here is 86.50. Just writing this down myself. And the value area low here is 71. But I'm not really watching 71 because we broke out of this value right here where the value area high, we came up, we broke out. I mean, just let me tell you this, read the story. We've had this long-term major price acceptance in around the 64.50. In fact, the composite VPOC going back to October the 9th, 2013 shifted up to 64.75, which means it's the most accepted price going all the way back to October. But then we fell out of that balance and we came down and we tested a couple of the prior areas of price acceptance, found price acceptance, then worked our way back up, okay, back through those areas of price acceptance. And then if you were in homework earlier this week and late last week, I said if we get back up and we accept the 64.74, then they're going to go and make another run for the high. And the area that we were looking for was the value area high at 67 or the 68.50, which I said would be the breakout. And once we got above 68.50, we're above the CLVN and we're above the major value area high. We did that, okay, 2 days ago. And then I said, well, now that they broke out, they're going to try to find out where they accept value, okay, after the breakout. So bring this to the front. They accepted the value in around 70, okay, and they did that yesterday. We had our VPOC, okay, at 1870. So they accepted 1870. Now, overnight and on news, they're making another move, and they're breaking outside of the value area high of the 2-day microcomposite and above the key CLVN at 76.25. And the next destination where they would expect to find sellers, remember the market, when it goes in price discovery, when the market is moving up, it's advertising to the sellers. Where are the sellers going to likely to step in? Well, they're likely going to step in where they found value before and where they tried to hold value above us, which was at that 81.50. Now we've got to accept inside of this value area and accept 81.50 in order to make another move up. If they fall out of this this area, they're going to likely come back down and see if they can pick buyers up with more conviction down here at the 1870. So the key line right now for us is going to be between the 76.25 CLVN and 75.50. So mark that as a slush area on your chart. We'll do it when we get to the other levels. If we hold above that, you want to be long into this 81.50, and I push through, okay, to come up and test the value area high at 86.75 and see if they break out. I'm not sure they can. They made a pretty strong move, and we've got a gap fill. The gap fill is all the way down here at 73, I believe, or 72.25, I should say. So I'm not sure that we're going to break out of this value area today. I'll have a plan in place if we do, because I'll have this 86.50 on my chart as a trade area, and then I'll get long into a push to 92. I think more reasonable. You've got a normal day. You know, you had a bell curve. I think we're going to chop around in this area between 86.50 and 76.25. So let's take a look at what happened overnight. Sorry, don't need that. All right, so overnight we went up and we just made a new high at 82.50. We're coming back in. The overnight balance is at 79.75. So that's the VPOC. So let's start putting our levels on our chart. And we have a high of 82.50. This is no longer going to be a target above. It's going to be the balance. All right, and then we have our overnight low all the way down at where our close was at 72.25. Which is right at the value area high here. So we're currently trading at this 78. So we've got a gap fill. Howard, can you do me a favor? I don't just calculate what if we opened up this area right here, what the half gap is, and then we have our range low, and we still have a naked close, even though we've moved up overnight. We still have a naked close here at 74 from prior day of trading. We didn't quite take it out. We had the IB high just below it, but we didn't actually take it out. So, what I would be looking at, we can get rid this, well, let me just put the VPOC in. The VPOC overnight is 78.50, which is where we're trading right now. And get rid of this and start looking at our levels. So as I said, this 76.25 and 75.50 is going to be a key area for us today. So you want to be long above it and short into it. Now this is a slush zone. All right, so I'm going to put it right at 86 because you don't want to get short until you're below 75.50. You don't want to get long until you're above 76.25 because when we're in here, we don't know which way it's going to go yet. So just make sure that your shorts are below 75.50 and your longs are above 76.25 to make sure that you don't get faked out. And then below the 75.25, you want to get short into a test of the range high. Howard, do you have the half gap fill yet?
I have it at around 77.25.
How can it be 77.25 if we're going to open up right here?
Well, I was just going from the overnight high to the close.
No, take it from where we're trading at right now. It should be somewhere. I'm thinking it's going to be somewhere in around the 75.50. Anybody else that can do that calculation quickly? I'm just got my eye on some other things right now. So if we do get below this, I'm thinking it's going to be somewhere where that half gap is. You got it? Got the number yet?
It's about 75.
So it is 75. So that is your half gap fill as well. So we're likely to come down here and test this at some point in time today if we don't see initiative buyers stepping in. So below 75.50, you want to be short into the first target, which is going to be this 74, which is going to be the close of the gap and a test of the range low. This is also going to be a trade area because you could add on. If we break inside of this range, I would add on to the short if you're not already short. Or get short if you're not already short, but you should be short with the break below 75.50. But if you miss that, you have to wait to get below inside a range and go for the secondary target and the takeout of the overnight low and the test of the value area high and the close of the close of the naked close. So you've got the gap close, you've got the value area high, and you've got the overnight low, and that's going to be the main target below. I don't want the overnight low. It's going to be a little bit convoluted in here. Wants to give me the overnight low. Just remember that the overnight low is our main target below, okay? This whole area right here. And then if we continue and we do get weakness, then you've got your naked VPOC right here with the value area low right there. And remember, that 70 area is, okay, your balance inside of range. So I'm going to put a target on here even though we have everything else already there, and that is our main balance inside a range. All right, and then if we do break back below the value area low, you've got a target below at 68.25. I'm sorry, not a target, a trade area. Well, trade areas are targets too, but they're also possible, reversal points. And then below 68, I would target the 67.50 test of the range low. And of course, the big number, okay, is going to be 64.75 below us. And I could put the composite VPOC, and then just below that you have 63. And the other side of balance around that is 1860. All right, so that's what I'm looking at to the low side. Okay, to the high side, if we hold this 76, okay, your first target, above that is 77. We're already trading 78. Now, as always, we're going to open up outside of range and outside of value. We're also going to open up outside of the microcomposite value. So we have to watch the open and be very careful on the open, because you want to watch if it's got initiative buyer stepping in. If you see initiative buyer stepping in, don't fade it, okay, because they're likely going to try to rip it, and you don't want to face peel. And they're probably going to take it up to the 8150 and take out the 8250. The other side of balance on that 8250 is 8350. So if they come up and take out the overnight high, I'd be looking for responsive sellers stepping in here around 8350. And then above 8350, the next level, okay, is going to be the 8550 to 8650. This is going to be our main target above. Why? Because of the fact, okay, that that's the value area high, okay, and the CLVN, okay, right in this prior area where they tried to hold balance around this 8150. And then above 8650, okay, 92 and a quarter. I don't think you get much more resistance, but you got to watch that 88. Was it 87, 80? What was it, 88.50, Howard, or 87.50? The prior all-time high. And last month's high. 87.50, sorry. So that would be my target above that 86.50 is the 87.50 right here. You might get some resistance there, but there's not much up here. So if they get outside of this current balance zone, I'd be looking for a takeout of the all-time high. And remember, our 20-day ATR target right now is this 92. Okay, so that is our extended target above. How am I doing for time?
Got 15 minutes to open.
All right, thanks. I can type. All right, so that's what we got on the ES. Now, last night, I want to go and take a look at gold. You can't do that right now. Sorry. Oh, okay. Last night I put in the room, and I haven't even looked at it since, that we've got a tech gap, Mr. Sneaky, on the daily gold. Oh, come on. Sometimes I just can't manipulate my charts. All right, so I'm trying to bring this in so you can see it. We still have this this cup and handle formation with the handle remaining valid until we get down into the 61 to 58 area. We've got a tech gap, Mr. Sneaky, going on. We've got some further weakness coming in, but I would look for, coming down into the 65 area, and I'd be looking to get long off of this the 65 area, because you're going to get a bounce here at 61 and likely come up and close the gap, which I think is going to be somewhere in around the 1288 range. Let's take a look at what that looks like on the composite. And I can't do that because I don't even have my gold charts, and I'm not going to bother with it. But we're still looking for that bounce and a move towards the top right rim of the cup in gold. I want to take a quick look at the Russell. Just got to get my charts open here. All right. So currently, right now, we're just inside of the high from yesterday on the Russell in this 1151, and we've got this distribution zone, okay, where the value area high is the 5180. We had 52 as our key area, yesterday, and we didn't quite get there until early on. We got there early on, and then we're coming back into it late in the afternoon. We didn't actually hit it until last night. But you've got balance right now in around this 48, and you've got the value area low down here at 43, with the CLVNs, the two sides of balance, at 44 and 50-50. And we're just trading above that 50-50. If we hold 50-50, okay, really I'm looking at 49.50 as because it's the value area high from yesterday, so I'll always take the lower number, and I'd be looking to see if you see responsive buyers stepping in here. If if you're not already short, I would have shorted the 52, but that's already late now. But we're now inside of the range and testing the IB high from yesterday. If we continue on and we break below the 49.50 area, I would get short into the main target, which will be 47.75, which is right around this 48.10. And a takeout of the naked VPOC and a test of the midpoint from yesterday. And then you've got your naked close, which will close the gap just below that at this 46.20, with a push to the other side of that balance, okay, which is just above the value area high from the microcomposite in around that 43.70 to 44 area. So I've got 44. If we break down below that, I'd look for a move to test the range low, and I don't think it's going to hold. The big target below us is this 39, and coming back down to this microcomposite VPOC, and to test the range low from the 2 days of balance that we've been in. And then below that, you've got a naked VPOC down here at 35.75. If we get back above 52, all right, then we're breaking outside of the value area of the 2-day microcomposite, and I'd look for a push through to test the other side of balance at that 1160. That's going to be our major. It's 1160.40 actually. That's going to be our major resistance, and if we break, I look for responsive sellers to step in there to hold us inside of this distribution zone. I don't think we're done with this. This is still too blunt for my liking. I still think that we've got some undetermined fair value, so I think they're going to chop it in this area between 44 and 60. I'm thinking 60 is probably 60.40 is probably going to be tested today at some point in time. But if we don't break out of it, look for a short back into back towards this 52 area. Even 55 being your initial target. If we break above that, then the first target above is this CHVN at 63.20. My composite time is also going back to October the 9th, 2013. So the next target above, nice long-term price acceptance, is at 63.25, with the other side of balance being up at 66.50, and then you've got 70 and 71 above with an extended target up here, which is the CHVN right here at 74.70. So that's everything I've got, and I'll post that chart as well. Let's just take a quick look at where we are on the ES Renko and Keltner. We're currently sitting right on top of the center line of the Keltner. If we break below the Keltner channel, test of the lower Keltner line will take us down to test that range high and that target down there at 73, 75, 73 quarter. If we hold the center line here at 79.50 and we make a move up, the move up is towards this 85.75, but by the time we get there, it's actually going to be 86.50, which is our main target above. So this is, I always like to show why I watch the Renko. I watch the Renko to take out some of the noise, but I also watch the Renko because with the Keltner, because the Keltner gives me ranges that generally will line up with my volume profile. So that's going to complete the morning homework session for Thursday, the 24th of April. As always, trade well, trade safe, and we'll catch you on the flip side.